Hello, dear viewers. Today, we've got a transformative journey planned for you. We're diving deep into some incredibly simple yet rarely known investing secrets that can significantly boost your financial health. Have you ever wondered why some investors always seem to be on the winning side, while others struggle? Well, the answer lies not in complicated algorithms or insider information, but in some basic principles, which are surprisingly overlooked. So stick around because we have a big secret to reveal. A secret that can turn the tables in your favor and arm you to make informed decisions about your financial future. Excited yet? Let's get started. This journey, dear viewers, will take us through the essence of Benjamin Graham's classic, The Intelligent Investor. Chapter 1. Investment versus Speculation. In the first leg of this journey, Graham draws a clear line between investing and speculation. The distinction might sound simple, but it's often blurred. Investing is about thorough analysis and long-term commitment, whereas speculation resembles a bet on price changes. Remember, to be a successful investor, learning should never stop. Are you investing, or are you speculating? This reflection could change your financial trajectory. Chapter 2. The Investor and Inflation. In this chapter, Graham talks about the often underestimated factor of inflation. This invisible force can erode your returns over time. He suggests that stocks and real estate are effective shields against inflation. What's your strategy to combat the impact of inflation on your investments? Chapter 3. A Century of Stock Market History. Graham takes us on a historical journey, showing that despite short-term volatility, the market has always shown an upward trend in the long term. This perspective can significantly impact your investment approach. Are you letting short-term market volatility influence your long-term investment decisions? Chapter 4. General Portfolio Policy. Here, Graham proposes a balanced portfolio with a mix of stocks and bonds to manage risk. He introduces us to the concept of margin of safety, emphasizing never to invest unless the business is available at a significant discount to its actual value. How can you incorporate the margin of safety principle into your investment strategy? Chapter 5. The Defensive Investor and Common Stocks. Graham speaks of a defensive investor who seeks security and minimal involvement. He advises such investors to invest in large, well-established, and financially stable companies that have a consistent dividend payment record. How defensive or aggressive is your current investment strategy? Chapter 6. The Enterprising Investor. Graham describes an enterprising investor as someone willing to devote time and energy to find less popular yet sound securities. He introduces us to Mr. Market, the metaphor for the irrational and emotional investor. Are your investment decisions based on sound analysis or swayed by the market's mood? Chapter 7. Margin of Safety. Graham concludes by revisiting the margin of safety concept, underscoring that this is the secret to successful investing. More than chasing big gains, focus on preventing losses. Now, for the big secret we promised. The margin of safety principle is more than just a concept. It's an all-encompassing philosophy that can be applied to all areas of life. How can you apply the margin of safety philosophy in your day-to-day decisions? Conclusion. As we wrap up, remember that the intelligent investor is not just about making money. It's about making intelligent decisions, understanding the market psychology, and aligning your investments with your financial goals and risk tolerance. Here's a task for the coming week. Review your investments. Are they speculative or based on thorough analysis? How well are they protected against inflation? And do they have a substantial margin of safety? Reflect on these points, and join us next week to share your insights. Until then, remember, the intelligent investor sells to optimists and buys from pessimists. So, continue learning, growing, and investing intelligently.